So I actually modified this a little bit yesterday because there were so many good speakers. They all frame this as being in the complexity of payments. Good partnerships are the key to that. And as I explained to people, friends and colleagues and things like that about, what it's like to work in payments as opposed to working in technology where you can do things. You can build something, you can market it, you can sell it, you can deliver it, you can support it. In payments, it's very unique. You cannot do anything on your own. It's an impossible business to be in unless you are standing shoulder to shoulder with partners on either side of you, in front of you, and back of you. And what makes it even more complex is a lot of times those partners are also competitors in some way. And so that focus on the conversation yesterday, the way that people talked about it, I thought, thinking about fighting fintechs in a particular way, in a partnership way, but we're a fintech at the same time. Thinking about it more in the context of, in the complexity of this business that we're on around payments, that strong relationships with other people will be successful for us. It's also a way to make your partner successful and to play within this ecosystem in a positive way. So I thought what I would do is use the context of all this great conversation about partnerships and think about it in a particular structure. So a little bit about us. So we are some folks within the company, it's not an official tagline, but we're a fintech who put the tech in fintech, because really what we do is we work extensively with our banking partners. Here's a few of them on the list. There are some of other banks and partners we have which are not public, a lot of them. Some are actually here. So we have a long pedigree and experience of working with banking and financial institutions and other providers where we come in with a very specific solution, a specific approach to provide capabilities so that those partners can go to market. And it's important, and somebody said it yesterday, I don't know if it was Barry or Alan in particular, who said, with partnerships, smaller providers and bigger providers, we clearly are the innovation arm of that. We move quickly, we make changes, we launch capabilities, and we look at being a partner to these large institutions because they need that as part of their strategy. They provide us distribution and reach. And if we do this the correct way, there's a lot of value in it for both of us. So the key thing to think about here is, and this used to say the fintech threat is imminent. I changed it to the disruptor because that's really what it is for us in the payments business. It's a third party coming in and trying to disintermediate a relationship, disintermediate a service. They see an opportunity to make money, and if they can drive a wedge between an existing legacy provider, an existing legacy relationship, and a customer for their own benefit, they're going to do that. And that's what's going on. And we're going to talk about this specifically in this context of really around receivables. A place where banks have played a long and predominant role is helping organizations to bring revenue and money into the business. So the actual management and processing of receivables, and whether that comes in the form of card-based transactions, lockbox cash, whatever it is, banks play a very prominent role in that. And there are a lot of folks that are coming into the space, and they have been for a number of years, who want to sit in the middle of that process. And they can do that, frankly, by providing a great service. They go in and they provide, for example, here's the presentation of your digital bill. Here you can log into an account. Here you can manage budget billing. You can manage pay with different mechanisms. You can set it up so that it'll automatically pay with my credit card if it's under a certain amount, but it's over a certain amount, it'll pay with an ACH transaction. And providing that level of service and capabilities is great for the user. It's great for the actual organization who's sending out the bills and the statements that need to be paid. But it does disintermediate the legacy providers who have been doing this stuff in the banks. When you disintermediate a relationship in one aspect of it, you create the opportunity to disintermediate the entire relationship. So once you start to lose a foothold with a customer and they go somewhere else for part of the service you've been providing, it becomes a higher likelihood that they're going to go start looking for other capabilities that you currently serve them in other areas as well. So we want to really focus on the fact that there's a part of this that we can help in our role is help the banks maintain that relationship. And it's meaningful. So we know that banks and financial institutions are seeing declining revenue. Interest fee revenue has disappeared. They're not seeing the ability to transition into transaction fee revenue, annual recurring revenue. All those things that we think about as technology providers and we're measured on Banks don't think about it that way. And there is revenue bleeding out of that system at a rapid rate that's going to these disruptors and these other organizations. And I think the quote here is great because it really talks about the fact that you have to stop the bleeding. You've got to react to this because if it doesn't, it's going to get worse and worse. And so thinking about this as a financial institution and realizing that they have to have changes here because otherwise we're going to start to see that hemorrhaging increase becomes critical. And so when you think about this as an institution where you've got longstanding established relationships, one of the ways that we want to come in and help solve this is by making sure that sticky relationship around receivables exists. I thought Barry was really, talked a lot about this yesterday and the transformation of Deluxe in particular. Their market share of checks are growing, but the market for checks is declining. And it's because more people are shifting to Deluxe, but overall that market's coming down. And their transformation into being more of a digital provider is really critical. And they represent what other banks and financial institutions should be doing. This is an example of just how we work with Citi. So Citi has a very comprehensive bill pay solution, presentment payment, et cetera, called Present and Pay, and we power a good chunk of that. We power that not only with our platform in particular, but we help enable things like MasterCard Bill Pay Exchange. We provide the plumbing for that to work within that environment. We provide them with Spring by Citi, some other capabilities we have. We provide all the hooks from the receivables into those systems. So we sit behind the scenes and make a lot of these things happen from an orchestration standpoint because Citi's a big organization. They've got a tremendous overhead. They are thinking about bigger issues around cross-border, international, servicing very large Fortune 500, 110, 5 companies with their comprehensive banking needs. Having somebody like us who can come in and quickly adapt and turn around with a team and say, oh, you want you want MasterCard Bill Pay Exchange? Yep, we can have that in 90 days. It's going to be plugged in, fully certified. We're going to worry about doing that with MasterCard, et cetera. We'll turn it on for you. And they can do that a lot faster than what you can imagine the Citi IT and development organization could do. And all of this should lead to really tangible results. If as a bank and a financial institution, you can go in and start paying attention to what your existing customers want or your prospective customers, it should start to drive numbers. So this is some data we've been able to drive off of our platform in servicing our bank clients for a number of years. So one of these is just in that first initial period, our bank partners immediately pick up new clients. It's because they may have gone into somebody and said, hey, we provided you with banking services. And they may say, yeah, but I need to move from lockbox to digital payments. You didn't have that, but you have it now, great. That sort of closes the loop for me. It also means that they can go out there and more aggressively talk about a broader strategy. So we're a component of that more digital capability that a bank or financial institution may have. And if we start to become a successful one and we provide value, then we can help drive even more customer acquisition after that. And we've had great examples of some banks who've approached this transformation, this transition really aggressively, where their new customer acquisition rate reached 700% growth in 4 years. So there is, by the way, not to downplay it, an obligation and a responsibility from the bank to execute on this as well. So no, we don't just come in and drop it in and they're successful. There's a lot that we do in terms of hand-holding and marketing and training to make them successful. So this is a particular one who paid attention to that strategy and executed well. The other thing that comes on as the waterfall continues is not only are we going out and helping those financial institutions to acquire more direct customers, and for us it's the commercial banking customers that these banks acquire, it allows those folks to go out then and bring more people onto the system. So for example, we provide digital accounts receivable and payments capabilities for John Hancock through Citi. John Hancock then goes out and provides a online digital experience for paying your premiums and other things. John Hancock then is able to drive an enhancement in digital money movement, which then flows through John Hancock and through the bank as well. So what we see here is an increase in digital payment transactions overall. The greater the digital payment transactions that occur, the stickier the relationship is between the customer, whether it's B2B or B2C, and John Hancock. John Hancock being sticky with Citibank, the money that flows through that, it opens up for Citi to be able to offer even more banking services related to that. So the flow of money by the users is important, and we see that represented here, right? So the dollar volumes we see flowing through the system. So we see by adding the accounts receivable piece and putting in the right components, the right experience, the right capabilities for the biller, John Hancock, and the payer, whether it's you as an individual or your businesses, we see a significant adoption in digital payment movement. So we help in that transition from the physical to the digital. And again, when you create that dollar flow that comes through it, it opens up the opportunity to start thinking about additional digital services related to that. And all of this is related to the idea that we want to create sticky relationships. So instead of losing those discrete pieces of transactions and services out to these disruptors, what you're doing is creating more and more reasons for that customer to stick with you. We have almost a 100% client retention rate for the customers who come onto us from a bill payment standpoint, over 10 years. So it is an incredibly sticky relationship that a John Hancock or an Aetna or an Alight or a Southwest Gas, when they put the system on, they stick with it, and they stick with it in a really reliable and predictable way. The key thing for us is, yeah, we get to talk about that as alias wire, but it's not our customer. It's the bank's customer. Because we're providing the service through them, it's them retaining the relationship with those commercial customers. And so if you think about the capabilities that you're looking at, so for example, remote deposit capture is declining because checks are declining, but text to pay, and Shane talked a little bit about this, is rising because of the convenience of it. If you're responding that way and you're giving your commercial customer and their customers these enhanced ways to follow the way that behavior is changing, that's where you keep that customer retention rate. So it's not only putting the system in place, but being flexible and responsive and maintaining it. And those are things that we can do as a technology provider that a bank may not be able to do quite as quickly and as aggressively. So when you think about putting all these pieces together, and you think about the fact that you as a financial institution have to look at this being an example of a component of the overall relationship that you have, that becomes the basis for you to maintain and grow that existing relationship. And all of that falls into pieces of this where, can we make the money move faster? Can we make it more accurate? Can we make it more reliable for everybody within that ecosystem? And the more that you do that as a legacy provider of broader capabilities, the less reason somebody's going to go find a disruptor who can do those things outside of your system. So hit all those points, think about it the right way, find a partner to be able to do it. Because I said before, at the end of the day, it's not really our customer, it's yours as the bank. If you look at folks like us who have a very, and there are other folks that are out there that do this, if you look at folks like us who want to focus on the technology, we want to think about the experience, we want to think about rapid development, we want to think about the capabilities that a financial institution needs, the financial institution's customer needs, the end user needs, and we're going to build that comprehensive solution for you. Look to us to be the partner that's going to think about solving your business's problems as well. And so if we can do that on that partnership standpoint, and in this sort of complex payments ecosystem, that's the way that you keep the disruptors at bay. So look beyond just the technology stack and the services that are being provided, and look more for the mentality and the approach and the focus. That's going to end up being a critical part of this. Okay, so I think we're way ahead, right? I either talk so fast or we all are.